Hey guys, hope you all had a great week and an amazing weekend. Generally been a very eventful week. The week started with a massive drawdown in Bitcoin and as well the entire crypto portfolio. Of course, my portfolio was down deep and that was not a good sight. And I guess if also you invested in cryptocurrencies or you have some stock assets, definitely you should have felt all of this. This was a very terrible week. And then followed by an anticipation of of a truce between Ukraine and Russia, which was highly anticipated. We were all happy about that, and even the gold prices actually started dropping in anticipation of that. Fortunately, on Friday was a disaster at the Oval Office. We saw Zelensky in total, disarray with whatever the Trump plan was about the truce deal. It was a disaster. And right now, we can clearly see that the war is not going to be anytime soon, and it was going to continue for indefinite timeline because the desire or the demands of Zelensky, I don't think is very, very realistic, to be honest. So, guys, if the first time you're just joining us, please like, share, and subscribe if you find this content very helpful. Also, if you want to learn how to trade the Forex market like we do here, or you like what we do, you want to get general understanding of how to interpret the market, how to interpret the news, then I highly recommend you subscribe to our membership platform on nfxup.com. And also, you should ensure you join our Discord platform where you're going to get real-time updates with all our analysis, day-to-day chats, and intraday activities. All right, guys, let's get in chat and talk more about what's going to happen this week. Cheers. So, in analysis today, we can clearly see this chart of Bitcoin. Of course, I'm not going to start with Bitcoin. I'm going to start with gold as always. Now, if you look at this chart, let's work with this one instead as the daily chart on gold. So last week, what we saw happen was that it was somewhat around that was on last week Monday. So I'm gonna quickly put something here. So on the 24th of February, yeah. So that was when we started seeing gold drop down, and this was because a week before now we had the optimism for the end of the war. Finally we had a prospect, or a timeline for the possibility of a peace deal, and everyone was anticipating this peace deal offered by Donald Trump between Putin and Zelensky. But fortunately, that did not happen, and because of this, this anticipation, we saw markets crude continue to decline until the last day, which was on Friday of the month, and we closed somewhere around 28.56 after testing lows of about 28.29, which was the previous support level over here. So this was a very it was a dynamic. No one ever expected that we were going to see what happened or what transpired at the Oval Office, and that clearly tells us that right now gold is bound for bull like return of the bull, a more bullish movement. So all of this suspicion of start seeing correction of gold, it's completely dead because whatever happened at the Oval Office, whatever Zelensky is right or not, the impact of this on the forex market, on the gold market especially, it's gonna be massive. I'm expecting to see price that's retracing immediately. So this week I'm expecting to see a clear bullish momentum return back to the market, and we should start aiming for over $3,000 prices in gold. Now, last week, in front of our last week analysis, I said, yeah, there's a likely possibility for us that seeing gold decline, having been in a long-term bullish move. But after last week, it's clear that we don't know when the war is going to end. And the thing about gold is that gold works or gold thrives with uncertainties. Whenever there's a high level of uncertainty in the market, gold tends to thrive exceedingly well. And right now, Zelensky has just created a massive uncertainty in the market. Now, this has affected the entire market, both the stock market, the Bitcoin, cryptocurrency market, and as well the commodities market, especially gold. And let's see all of those things on here on our chat. So, following the impact of the news or the events of last week Friday, we saw that gold opened today Sunday with a very sharp jump, and of course, it's going to take a while. And then it's going to correct back, and then it's going to continue going upwards. So, I expect for us to see uh, a continuation of the bullish movements. Now, previously, if you follow the daily charts, we saw that breakout from the 4H4 timeline, and now we'll get here. Of course, I took the sell position last week, and I closed it right on Friday. So when we see such kind of movement, it's like this material tells us that this is going to be a fake out. We're just going to have. I'm going to get the curve just to make some sense, so guys can understand what is going to happen with the market. So yeah, so this is likely what we're going to be seeing. So this is going to be like a bear trap, and at the end of the day, we're not going to be seeing much continuation or any further bearish movements, and we're going to see a rapid return of the bull. And I think fully well that this week, and after what happened last week, we we are heading straight up for a very high level of good prices towards probably the 38 $3,000 level. Last time we tried, we tested around 29.55, and we excuse me. So last time we tested around 29.55 and we didn't break through, but this time I'm certain that when we get back to this level, we're busting this level. We're going way high above this because following up the comment you see with the EU, and being supportive of what Zelensky did at the Oval Office, and Trump trying to make a peace deal, which is the only person who's trying to make a peace deal right now because Europe is not trying to do anything. Everyone is just angry at Putin and vexing about the whole attack. Of course, we know that is done, but right now we need peace to happen in both Ukraine. But the current vibes we get from the European countries, and the Ukraine itself, it's clear telling us that this war is not going to be ending anytime soon, and it's likely going to even escalate because Zelensky literally disrespected the US based on what happened at the office, and if this continues, we're definitely going to see higher prices for gold, and this is likely going to be what we're going to be getting from technical aspects. We're going to get a breakout above here and then we're going to see a return back to trend. So guys, this is what we're going to be spending for gold this week, and the following week I'm going to go back to the daily so we understand certain things that are transpired with the market. um for example, last week we had the decline, and that was after we completed our target for the symmetrical triangle, and right now we're going to see likely just a continuation of the markets. We already had this return test, and clearly tells us that this bear short-term bear movement is just going to be a trap, and we should definitely be looking forward to more bullish momentum and more bullish trades in the market. So guys, that's our analysis for gold. If you have any questions, please feel free to drop a comments or leave a comments in the comment section below after the video. Now we're going to be moving forward to US oil. So similar to gold last week, we saw USOil decline really rapidly to our yearly support zone, and this was obvious, because the sentiment on the previous eight repetitive US stock inventory reports has been very bearish for the crude, and also in anticipation of the peace deal, people were expecting for the Russia supply to be released back, for the to the global market. But then none of this suspension and sanctions are going to be removed. But none of this is going to happen anytime soon. So I'm expecting to see higher prices for gold for crude, following up with the escalation of the war. So if Russia is not supplying, Ukraine is not supplying, then most likely the price of crude is either going to stick around this level of 70 to 80 range, and not really anything below that. But I don't expect to see any lower prices for crude anytime soon. We're just going to see price continue to oscillate between these two things. And surprisingly, last week, for the first time in a very long time, we saw a shortage in the US stock, in the US crude oil stock. And that tells us that there's possibility for us that seeing, the bullish momentum being restored back for crude. And this week, I'm anticipating that we should see another negative US stock report for the crude oil as well. And obviously going to be bullish for the crude. So likely we may see crude start, approaching the 75 level again. And all of this is based on fundamentals, not technicals. So for technicals, we're just around the support zone. There's no catalyst right now to really trigger the bullish or a bullish, bullish buy signal. So there is no formation for anything like that. We just saw price still around the support zone, which is likely to test back again. So there's no signal right now to tell us that okay, yeah, we're going to take a trade. So none of those things are going to be happening. And if you looking at taking a trade this week on crude, you should be very careful. I strongly recommend you wait towards the release of the what's it called, the US stock report, and from there we can look forward to a better buy entry level. And also, if you want to take a risky trade, this is wait for it to break above this resistance or support zone which we have here, or previous resistance zone that should be above $71. But for right now, I think it's better you just wait to get a clear signal. So if market doesn't do anything reasonable between now till Wednesday when the inventory report will be released, then it's best to wait for the reports and get a clear signal. If it's going to be bullish this week, then we should expect it to looking towards a long-term buy, because right now this descending wedge that we have here is still not really broken. So price is still around here. So we either have to wait for it to break above the fallen wedge, or we just wait for the victory report and work with fundamentals. So that's all for US oil. Nothing much has changed. You still have the same charts as before. And yeah, we still have the same chart as before. I think on the long scale, we're either going to break upwards or break downwards. But most likely, we're going to break upwards. If the one lingers longer, we're going to break upwards. So the next thing we want to be checking out is Bitcoin. So last week was very eventful, like I said, and everything happened at the same time. Same time we saw at the end of the week as well, Trump announced the start of the purchase of the strategic crypto reserve, and that caused a very big shift in the market. The crypto market is waiting for something to like be a catalyst to push prices, to push price, like give that euphoric FOMO, and I think it's happening already. And if you follow up on my last week analysis, I was a bit down on my health, but at least I just hope that you got the message. And I was able to identify something, which is a very key thing. Now, I'm going to get back to this chat. Let me just quickly go show you guys something. So yeah, so this is exactly what happened. So currently we are in the total halving, right? And significantly from the past cycles, after the 100, this is it, after 200 days, 210 days. Now, one of the key reasons why I usually use timestamps and time range, to like do my analysis on Bitcoin is because historically, sometimes you don't really have any factual reasons why the market should go up. But because it's the bull market, things just align. So every time things always align. Is it that you get the Ford? Is it that you get or you get the catalyst that are going to push the market upwards? Now nobody knows what's going to cause it, but something just happens and it causes it. 208 days in the second half. After the second halving, we saw the crypto market start picking up. Now, if you watch this pink line here, this is the crypto market, without Bitcoin, while this is the normal Bitcoin market chart. So this is the same thing that happened in the second half, and that was in 2017 or 2016, 2017, right? So we saw that after the 38% dump, and one of this most likely must have been caused by China fall, because way back it was so much about China. So after the 38% drop, we saw the crypto market picked up. You see, before then it was only Bitcoin moving, while the crypto market was just a bit stagnant and just same thing going down, going down. And then the crypto market picked up after 210 days, and this is the same thing that is likely happening right now. So I'm going to show you guys something. So after 310 days, so I'm going to take this. I'm going to get down here. So let's see what's happening now. So we are here, right? This is somewhat around 310 days. I'm going to use this just to make it clear. Yeah, so you see what's likely happen. So we saw the crypto market on this other side. We saw the cryptocurrency market moving upwards, but not like significantly very strong. And now we saw the massive dump. The market has been dumping despite the fact that Bitcoin has been stagnating very well. Market has been dumping. So right now we're just about crossing this level. So I'm expecting that we should start seeing a clear reversal from the entire crypto market and aiming for new market highs, unlike what we've seen before. Now, Bitcoin has done really, really great things, and then the alt market has not really done as much as Bitcoin has done. So I'm expecting that we should see a general growth, not just a little bit of them, but everything should grow as fast as Bitcoin is going to be recovering. So all of those things are what I'm actually looking at, and I'm actually expecting and anticipating from this current cryptocurrency market. So now let's get back to Bitcoin. Now on Bitcoin charts, we can see what happened last week. Now I've been anticipating this for a very long time. We saw price in a ranging zone, and so this is where we had our price stuck. So I'm gonna take out the extension, and then we get a clear view of the market. So yeah, reduce this brightness so much render, but I don't like that color, so we can make use of blue, and yeah. So we got this. Now this is the zone. Now price has been ranging between this zone. So for quite a very long time, we get up, down, up, down, up, and that's trash. We're gonna do that again. So we get up, down, and then we saw the breakouts. And this is definitely gonna be a fake out, right? Because it's definitely not market didn't buy into that. So what happened is that for a long time we've been waiting for price to break out from the ranging charts, and everyone was exhausted and tired of waiting. And all of a sudden, we saw a price breakout, but not to the direction that we wanted. Fortunately, it broke it downwards. Now, the second thing that happened is that it stuck around our 50% Fibonacci level, which is a very, very strong trend support level. And after that, on Sunday, we saw the reversal. That's today. We saw the reversal and price regain. This is, Bitcoin loves to do this 10K kind of close in a day. And that's what we just saw. And this shows us that this is a very strong bullish signal and tell us that right now the bulls is back in control. So sentiment completely shifted from the bearish sentiment to right now the bullish sentiment. So right now I'm expecting that the next target Bitcoin is looking at is breaking above 38.2% Fibonacci level, and then we'll start looking towards a full bullish momentum, a full bullish recovery, higher prices, higher levels, and higher new all-time highs for Bitcoin. So that's all we're getting from the trend chart. So I'm expecting us to get more bullish movements, more bullish momentum, and higher prices for Bitcoin. So that's going to be all for this chart, and I'm going to quickly show you guys the long-term chart as always. So long-term charts, we still have everything in order. We're still in check, and nothing strange is happening on long-term chart. We're still exactly where the market has to be. So we're just keep looking out towards long-term prices. We'll keep looking towards the recovery of the current market prices. We saw the dump already, which was from here. It was about 27% dump here, and then 27-10% dump here, based on the exchange you're going to be working with. So if we see price recovery back up to 110K or 107K, and if we get up to 110K, I'm very sure right now we're going to be breaking through this level. All right, guys. So that's all for today's analysis. And so one last thing I want to quickly say back on gold, rather, it's that on the weekly chat, just in case you're following up with this on the weekly chat, if you check the market, last week we almost had like a bearish, not this one. I'm gonna use the RSI. We had something like the divergence. And, yeah, yeah. So we had a bearish divergence last week, but I'm clearly certain that that's not gonna hold anymore because it's already fully priced in. Because now look at this, we had this eye, and also we had these eyes. Yeah. So by default, when you get higher highs, right, you expect to get the same higher highs in in our indicator. But right now we get higher highs and then we get lower highs, right? Which doesn't make any sense. So that's a clear divergence. And this is a bearish divergence, which naturally gave us the trigger for the price movement, which we experienced last week. And right now, following up with the fundamentals, even if you're a technical analyst and you're expecting price to keep going down, I really, really doubt that. So you have to be very careful if you're trading only with technical analysis. So despite the fact that this clearly tells us that we should expect longer downtrend, something like price dropping down up to somewhere around 2700. That should be the ideal thing, right? But I don't think we're gonna get the ideal thing because we're currently in a very abnormal market situation. Following up with what happened last week, Friday, that was a very key event, and so it's very, very important. So you should not just be so focused on technical analysis of the market or price action. Focus on fundamental of the market, and that's why this divergence. Likewise, the fact that we saw the price drop from 29.43 to 28.43 last week, Friday, throughout the week. I don't think this is going to continue like the previous times when we had such a weekly strong divergence. So right now, guys, keep your trade very, very low risk on the sell. Focus more on the buy and top up your position. Right now, we're fully bullish, and I'm also very bullish on this market. Guys, that's all for today's analysis. If you find it helpful, please like, share, subscribe, and as well join our Discord community. And as well, leave any comment in the section that you think you want us to look into. All right, guys, cheers, and have a great week ahead.